application scenarios.
Yeah, actually, and to follow up on your answer, one of the things that we're seeing on the retail side, like I fully expect my brokerage account within actually a year to list currencies, digital currencies under stocks, your positions of stocks, options, and whatever else you have on futures, to have a notional amount for digital currencies. But right now the limitation is, as you know, it's all regulatory. We just can't get to certain places, and then you run the risk of alienating your customers.
So I think just really quick, if I can add two things to that. So from an adoption perspective, I think it's going to be, within the 3 to 5 year time frame. So I agree with the previous comment, but I think one of the catalysts or one of the challenges around this is going to be, for your grandmother, for your grandfather, kind of to use it, to the point that was made earlier. It's got to be simple, but ultimately it's got to be accepted in kind of the finance, retail, banking environment, because people, A, don't want to know that they're using it, they just want to use it, and most importantly, they want to be able to marry it with their traditional accounts, because that's how they're going to fund this initially. So I think that's going to be the biggest catalyst, when you can go and consume commodities or services as you do today with credit cards or mobile phones. That's, I think, when the adoption is going to kick in and become critical mass.
Yeah, that will definitely help. So I'm gonna follow up with you. A different question though. So there are a few companies that have tried to maybe stabilize Bitcoin and digital currency a little bit by tying it to, for example, to the dollar. Does crypto need to be more stable in general? Like, does something with 100% volatility? 100% volatility again means that if it's $100, it means the expected move is $100 higher or lower over the course of next year, which is great for investors because you want to risk a little to potentially make a lot if you like it. But the question is, if you're using it transactionally, and does it need to be tied to the dollar, or is volatility does it need to be stable, or is volatility a good thing in the transactional sense?
So I think it's a little bit of both. I think volatility is a good thing, especially in the early days, to kind of weed out everything that's going on, establish some standards, but at the same time, I think stability in the marketplace will really be beneficial. I don't necessarily know if it needs to be tied to a dollar or to the euro or to the Japanese yen or what have you, any specific fiat currency. I think it's really more about the stabilization and the underlying foundation of that particular currency. So if you think about Bitcoin or what have you, what's behind it? What's, who's managing it, what's the team, what's the market penetration, all those different things I think are going to stabilize it itself.
Steve, let's talk a little bit about, just to throw it in there, about ICOs, because I know I'm kind of fascinated by the space. I haven't really participated in too much myself, but it seems promising in the sense of, venture capital and everything else, but does it have a strong enough, so you need to have some faith, you need to have some trust. Does it have a strong enough history so far to survive, or is it on life support?
I think life support's a good way to look at it from a regulated basis. I think when you look at the multitude of companies that need to raise capital, I think the ICO, whether it's an ICO or a token, ends up being a security, ends up being something that goes to market, whether you're at the VC level or the PE level, the private equity level. I think our focus is to stabilize the investments in the early stage companies, meaning again $5 to $250 million companies. So much more boring than kind of the volatility you guys have. I think last year on an aggregate basis we were at 12.19% interest, which is very boring from a trading standpoint. But from a yield standpoint, it's quite aggressive.
These privacy coins aren't as adopted as, say Bitcoin, just because, they're used for a lot of underground activity, a lot of sketchy activity. But I mean, from the OTC trading standpoint, like we don't trade privacy coins just because we need to send trade confirmations to counterparties with links that are, links to transactions on Etherscan or BlockCypher, and we need that transparency right now in order to facilitate, institutional size liquidity. So I think that a lot of the privacy coins right now aren't, like the privacy feature isn't that meaningful right now because, there's such a lack of regulatory and there's such a lack of just transparency with how all this stuff is going to be, governed. So, I think Bitcoin, Ethereum, and transparency is is really important to adoption in the short term, right? Maybe in the longer term, there will be more of a need for privacy in transactions.
So, quick story, one morning, I'm doing a segment on our show called Bootstrapping in America, and the producer says, I got this 17-year-old kid from Canada, he's launching a coin, and he wants to come on the network and talk about it. So I'm like, well, we don't usually do things, but this may be interesting. So one of the few times we did a call-in, and it was this kid named Vitalik Buterin who created Ethereum. And when he's on the show, I'm like, I turned to our co-host Tony and I said, you know, nobody's ever going to buy this. I think I want to say it could have been 3 cents at the time, but maybe 30 cents, and we just kind of laughed it off like that would be the dumbest investment we ever made. And it was the dumbest investment we never made. But, and it turns out this kid, I mean, he was in his mom's basement, I'm not kidding, working from his mom's basement on a set of headphones when we interviewed him. I think it was the first interview we ever did. But obviously he's done some pretty spectacular stuff. So he recently said that too much focus is given right now, Scott, to the price of crypto and not on the execution of projects. Is he right?
100%, and that's why I mentioned before that price is number 9 on my list of sexy when it comes to this industry. You know, it's certainly, you know, the first thing that everybody wants to talk about, and, you know, panels like these draw the biggest crowds, and I get that, I understand that, but until you start separating your first world brain that is addicted to the US dollar as being the peg of value, you're not able to then release yourself into what I call your second world financial brain, where you start thinking more in terms of that future value proposition that's out there, and that's going to be the protocol layers like Ethereum and Bitcoin and the rest of them are all going to benefit from people building application layers on top of it. So that's why I kind of stayed away from ICOs for the last two and a half years, just because I would rather see somebody be successful and build something and then take a look at it, as opposed to just taking a look at a website, a white paper, and start sending over protocol coding.
Good. So Ross, I'll throw this over to you then, along the same lines. Does large tech companies like Google and Facebook, and they're working on lots of different kind of shadow-based crypto projects, things like that. Does the involvement of large corporate players help or hurt kind of the process, the entrepreneurial process or the process?
Yeah, I think it depends. I think like overall will help with the mass adoption, right? Because they already have millions of users on their platform. So as far as I know, they focus on the underlying technologies, right? So they focus on like moving their infrastructure or moving their applications to use the blockchain technologies, because they see, this decentralized, and they cannot change the records, so all the features from the blockchain. So they see the real usage to improve their infrastructure and applications. But from another like economic perspective, I don't think they're actively working on that, and that actually leaves the room for like entrepreneurs to to make the innovations.
I'm going to change gears just a bit. Yuri, I have a question for you about potential Congress or some kind of legislation talking about who can use blockchain and how. So there's a lot of discussion about artificial intelligence and AI having blockchain accounts, and then kind of the legal legitimacy of that. Can you comment on that? Because you've heard a lot of people from Elon Musk down to lots of others talking about how kind of one of the greatest risks out there potentially is different AI accounts, and especially sitting on blockchain where they where things might be anonymous. Are you worried about Congress getting involved, or any kind of governmental regulations?
Yeah, I think there already are. So, from a company perspective, we're directly engaged with the SEC around a couple of things that we're trying to do. And so from that perspective, what we're hearing at a very high level, and I'll answer your question more directly in a second, but essentially is that they want to see everything. They want companies to approach them. They want companies to talk to them. That being said, there is a lot of skepticism from
Blockchain and smart contracts. Talking about just kind of the transition.
Yeah, I think we've got to look at it we've taken a very conservative approach to the tradability of the underlying private companies, eliminating because from a regulatory standpoint, we have to provide both sides of the equation through the broker-dealer community. So we have enormous transparency, avoiding any and all anonymous trades. So ours are, the regulators know everybody involved in every trade. And I don't think it'll change in the short term from our side.
Okay. Hey, Alex, everyone talks about blockchain. It's even kind of the name of the conference. But it's hard for just the average person to point to examples of how blockchain works for them. It's just a tough thing for people. And I like when, I think in order for a product to be successful, the average person has to be able to articulate what it is. Like without articulation, there's almost no sustainability. So what's the best example you can think of how blockchain is being used in kind of modern life,
Yeah, money is still the best use case, right? So Bitcoin is the original blockchain, and will always be, in my opinion. I think all this experimentation at the consensus layer is kind of rubbish, and still these proof of work, cryptocurrencies are still sort of the mainstream, most adopted cryptocurrencies. So I think as a transfer of, first time transfer digitally over the internet, right, peer to peer, and I think that's the primary use case, and will be for the foreseeable future.
That's great. We had a short time slot of 45 minutes, but we have, and we've used it, but we have, I wanted to leave 1 or 2, minutes open for any questions for these 5 experts. So if anybody wants to ask a question, just jump up and I'll fire it off at them and just say just point to who you want. If not, we'll, sure, go ahead.
Okay, on the Ruby part, how do you expect cryptocurrency to address human condition poverty?
The question is, how do you expect cryptocurrency to address the human condition?
Address poverty, inequality, and environmental issues.
Poverty,
Yes.
environmental issues, quality of life, positivity.
Well,
It's just it's an easy softball.
Yeah, it really comes down to the opportunities of opening up financial services to billions of people who don't have access to it today. So that's, and the other thing too, in terms of which industries are going to be impacted, finance is obviously one that's most ripe, because for 400 years, the whole reason that the banking business model was created so that you could have a third party maintain a double entry accounting system. I mean, that's all it is. And Bitcoin allows single entry accounting, where it's just peer-to-peer, me to you, take 1 Bitcoin out of my account, put it into yours. And it's going to open up some opportunities where, as long as you have a cell phone, with billions of people do, you can make transactions happen without having to have a government ID, filling out applications, doing that sort of thing. So this has been kind of the holy grail around micro lending for so many years, but nobody's been able to figure out how to do micro lending, because you always needed a bank in the middle, and then you had to collect. Here, when you're just doing peer-to-peer transfers and smart contracts and maintaining reputations, like Wolf was talking about with Samata, there's going to be some interesting ways where people who don't have access to it but do have a cell phone are able to actually get into the game of banking and finance.
I'm sorry, you answered that question. So far, there's no trust, that education, why cryptocurrency costs $20,000 for a cheap currency?
The price of Bitcoin in terms of its utility doesn't even matter, because it's infinitely divisible.
It's speculation for the average Joe, because the US dollar came out for the average Joe, the euro came out for the average Joe, the Bitcoin didn't come from the average Joe. There's a gap.
If I'm understanding, I'd say yes, absolutely. But you can subdivide, Bitcoin into 100 million subparts, and that's what I tell people. Bitcoin isn't actually a thing; it's a definition of 100 million pieces of programmable code on the Bitcoin blockchain. And if it ever got to the point where 1 Bitcoin was worth $100 million and you needed to subdivide it more through the consensus you know, mechanisms, you'd probably be able to go down a ninth decimal point, and now you'd have a billion Satoshis per Bitcoin.
Let's take one more question if there is one, just to wrap it up. Sure, go ahead.
From an institutional investment standpoint, what would you say are the tools that are missing that are limiting your ability to really move in cryptocurrency, if any?
Yeah, I mean, I'll just say the first one's custody for sure. I mean, I'm sure you guys have heard that 1,000 times, but from what I'm hearing is large traditional players that want to adopt cryptocurrency positions, they're not going to custody with like a Coinbase or a BitGo or anything like that. Like they're looking for like State Street, you know, or custody services that are taking brand risk themselves. So I think that's very important. I have heard from a number of people that Fidelity will have a retail-facing custody solution, hopefully by the end of the year. So that's exciting, but we'll see. I mean, it's all talk.
So, on behalf of the $10 cell phone, which is going to change the world, because I agree with you, the $10 cell phone is going to be the difference maker. And I want to thank this panel of 5 people coming out and spend some time with me. Thanks so much.
Hi everyone, thanks for coming out today. We're going to move on with the program here, and this panel is going to be about the future of smart contracts. And we're going to look forward to the year 2030 and see what smart contracts might hold. I want to thank George and the Innovation and Development Foundation for inviting us out here to speak today. And I think we're just going to sort of start right in. So I didn't have this question coming into this panel, but I think, for one thing, I think there's a sort of assumption that this audience is probably savvy enough to know what a smart contract is. But A, I might be wrong about that. And B, for those people who are working regularly in the smart contract space, you may have a particular definition of what you consider to be a smart contract that you're actually interested in. So I'm going to open this up, and whoever holds a mic up first can answer this question. How would you define a smart contract? And can we please have some quiet in the audience? It's going to be very difficult for people to hear on stage, and also it's going to be hard to capture on video if people are talking. Thank you.
I guess I'll take a stab at this first. A smart contract, to me, this is kind of forward, future-thinking stuff, but to me, it's applications and digital businesses operating as their own entities. So, you know, I think the future